Good morning, all. Camelback Trading 2724 coming to you this Monday morning, May 4th. Hope you all had a great weekend. We are looking at the market profile of the SPY ETF here on Window Trader. And the sellers, the bears, are picking up where they left off on Friday, where we had a trend day down. Even though it resembled a B shape, it still had a trend day down with two sets of single prints. We are looking to gap lower for the second time this month out of 2 trading days, as the amount of gaps as opposed to trading days is still over 50% in 2020. Talk about uncertainty. Let's go over destinations and a game plan for this morning. So right now, since we have just over an hour to go prior to the opening, we are going to use Friday's low on both sides of the equation. So right now, if we are to gap lower, the first destination on the upside would be 281.52, which is Friday's low. Okay, if we're to gap higher. Then above that, we have 9 wide. I apologize. Let me figure this out. We were 9 wide at 282.44. So your next upside destination, if this gap is to get filled, would be eyes high of 282.44. Then we have these two sets of single prints. First one start at L's high, 283.41, get filled at 47. And the second one starts at 283.97, gets filled at 284.16. Then we have Friday's high of 286.04 and filling the gap at 288.59, a 255-point gap from the 11th. And don't forget, we have this naked pocket at 287.46. We are 10 wide, where we gapped above it on one day, gapped below it on Friday, so it's still in play. For the downside, if we do not gap lower, we'll use Friday's low of 281.52. Then it gets pretty interesting, right? We have a bit of a price void and a vacuum on the downside. And that's what your algorithms are going to start shooting for if we start going lower. First one would be a daily low, 278.50. So that's it's exactly $2 from where we're trading right now. Then below that, we don't have anything to 278.22, which is an afternoon pullback low from the 22nd. That's H's low. Daily low from that day at 276.91. Then we're 9 wide from the 21st, down at 273.86. And then 272.02, which is also a weekly low. And then 271.41, which is a weekly low. Now, let's not forget, Friday's low was 281.52. What was last week's low? 1, 2, 3, 4, 5. This is a weekly low. I apologize. So, if we are to stay below Friday's low, we would stop. A couple of things are going to happen here, right? We've been one-time framing up for 6 weeks. Right now, we might be stopping that on a gap, which means not only would it be a gap lower, it would be a weekly gap. So some things are changing here pretty drastically for the bulls. So what's the game plan for this morning? Well, right now we're trading at 280.70, just about 80 cents lower from Friday's low. That's a perfect ratio for me to take a short position, right? Because I know my risk. My risk is 80 cents. This gap gets filled, I get out and reassess. If the gap gets filled and we get accepted, right? One thing to fill the gap, another thing to get accepted back into Friday's range, well, then obviously your POC would be the next destination. So that's something very, very important. Right now my pre-market high is 281.19. So your pre-market high would get hit before you even fill the gap. So if you are to get accepted back into Friday's range, the odds of trading back up to eyes high, which was 9 wide, would be very, very good. So if we're open around 280.50, 280.70, I would absolutely take a put position because I know my out. If that gap does not get filled, remember, we don't have anything for $2 down to the 278.50 level. Now, in the next hour, if this gap is to get a lot bigger, like I said, then I probably would not get involved, because then I'd wait for a counter auction. Your risk reward's going to be a lot bigger the gap. I would look for a counter auction prior to taking that put play. Is there a call play on the opening? Absolutely not. There's nothing here. We have lower value, gap lower. There's nothing really to lean on. So I would not. I would have to wait for the initial balance to form. If we are to close the gap, get accepted back in to Friday's range, and then start one-time framing up in B period, then absolutely I'd look to take a call play, because then the odds of getting back to POC and at least attempting to get near the single prints, the odds would get a lot better then. So right now, with an hour to go, the one play would be a short play if we're the gap lower, out if accepted, back in. Now also, if in the next hour we open inside Friday's range, then I'm going to wait, because you're going to be in balance in value. If we trade up to the POC, get it and not get near the single prints and roll over, then I would look to probably take a put play, because then we'd at least test Friday's low. And then if we were to come out of Friday's low, after that I would take a short play, because again, I'd know my out if we get back into Friday's range. So that's what I was looking at early this morning. Again, in my room, you're going to have updates as soon as the market opens, as the game plan evolves. Okay, let's go over our charts. So, we'll look at the monthly first, right? One day into the month, we're one-time framing down. We have an inside month, which is going to probably take a while to come out of, if we come out of it at all this month. Now, this trend line has changed. It's not 278 anymore. This trend line's around the 280, 281 level. So if anything under 280 right now would put us below this 11-year trend line. So that's something that's going to probably be battled over, at least initially, here in May. Weekly, after being so strong for 6 weeks, there's a good chance we're going to stop the one-time framing up in the weekly if we take out Friday's low. Right? One time framed up 6 weeks, got above this triple top. We got as high as 294.88. Pretty impressive. However, one day, 1 week doesn't make a market. Right? The 287 level. Is it important? I think it's extremely important. Look how we got over it for 6 weeks, starting in August of 18. Never really got a lot of distance away from it. Got back into it, and look what happened. So, the one-time framing up stopping, the acceptance below 287, the acceptance back into these weeks, right? If we take out Friday's low, well, what's your next destination on the longer term? 272.02, 271.41, the bottom of those weeks' lows. That's what the longer-term destination would look like. And then on a daily, one time framing down 2 weeks, I said the gap is my main focus. Well, right now there's a possibility of another gap to the downside, which is going to put us in a tremendous balance. You could basically incorporate. Remember we had that 12-day balance before we broke out of it? Well, now you could use 294.88 as the high of your balance and 271.41 as the low. So that's a $13.50 balance range. No, it's not. I apologize. It's a $23.50 range. That's a huge balance, right? You're going to be looking. Here's the 2 weekly lows. These 2 days right here are those 2 weekly lows. I said it will be the next major destination. And to get to those, well, then you're going to have to deal with the 50-day moving average again, which right now is around 275.50. There's not a lot to the downside. So if we are to take out Friday's low, if we are to hold a gap, eventually, I would think this week we should migrate and test the 50 and then possibly test those 2 weekly lows. That's the goal for the bears this week. Obviously, the bulls want to close this gap from today stay in this balance, at least in the middle range, and start attacking where we were last week. Have a great day trading. I'll be updating my room prior to the opening. Check us out at camelbacktrading.org, and we'll recap the day at 4 p.m.